What is the quick way to compute the tax liability for a company? See, generally we see the P&L statement or the income statement where we start off with the operating profit, right? Or in some way you can look at it as PBIT or EBIT, earnings before interest and tax. For this, you add back depreciation because the depreciation is prepared based on the estimates concept. Probably it could be a straight line depreciation or it could be prepared by any other depreciation based mechanism. So whatever the depreciation that has been prepared with respect to that has been obtained with respect to the accounting standard, I'm not considering that. So probably it's virtually it is going like EBDIT and any other portion wherein any other portion of the expenses where there is any other portion of the expenses which are typically initially viewed as non-taxable, you have created it as an expense, but there is some portion of but it is tax exempted or there is a tax that is levied on it. So whichever initially treated as tax exempted, probably if I am talking about some expense, right? Now there is a revenue, there is an expense and there is an expense one. And you have taken out this expense one and whatever the profit that you have got, the tax is applied on this profit only, which means this expense one completely is going as a part of tax exemption. Because you have incurred it as an expense, there is a tax exemption that you are getting out of it. But what we are saying is there could be some expenses wherein either all or some portion of it is still taxable. Only some portion of it is allowed or some portion of that expense is tax free. If that's the case, whatever is that non-tax free portion of the expense, we will add it back. That would be included as a part of the tax computation. And on the top of it, I would be subtracting the capital allowances. This is where we are bringing in this is where we are bringing in the typical depreciation that has to be computed based on the tax reporting kind of standards which go as a part of the allowances, and even the interest that has been paid, even that is tax free, that is exempted from tax. So doing all this is going to result in my adjusted profit, or probably this is what typically comes out, and this is what typically comes out as the taxable income. On the top of it, whatever is the tax percentage, right? Again here, if different portions of the year have different tax percentages, even a weighted average of that would be taken in terms of computing the final tax liability for the company. So it all starts with the operating profit, some adjustment that are done to this operating profit to arrive at the adjusted profit, and on the top of that adjusted profit, a typical computation of the tax liability happens, right?